Rent-to-retirement investors. Today we have the pleasure of speaking with Yair with Lendai. Lendai is one of our most preferred lenders for our foreign national investors. As you all know, we invest across the country, the United States, in the best markets to optimize cash flow appreciation and equity. We have investors that are all across the country, and we also have many international investors. One of the biggest obstacles that we found is finding adequate financing for lenders. Leverage is an extremely powerful tool, as we all know, and that is really what allows us to scale our portfolio over time, is using the power of leverage to stretch your capital further, acquire more properties, and obtain overall better returns. So this is something that's been a challenge in the past with our foreign nationals and our international investors, is just finding a lender that is agile and flexible and offers decent rates to be able to allow our foreign national investors to really achieve the same goals that the clients do stateside here. Having a good lender in your team, no matter what your situation is an essential piece of building a successful portfolio. So without further ado, I'm going to go ahead and turn it over to you, Yair, to talk a little bit about who you guys are, what you're doing over at Lendai, and just give us a quick introduction if you don't mind.
Yes, so first of all, thank you, Zach, for having me here. It's a real pleasure. And Rent-to-Retirement is one of our best partners. And we see, you said you have foreign nationals investing in the US. We see your clients, we see you have it. Basically, I think you're the most international real estate company in the US. I've seen clients from you, I think, for 4 different continents that work with you. And that's amazing to see. The reach that you guys have is unparalleled in the market. And the deals that you're closing are amazing, I have to say. So kudos on that. And basically, if someone wants to understand what Lendai is all about, so Lendai was developed and is continued to develop, and of course, as a fintech company, a technology company, who is also a direct lender, who focus only on non-US residents or Americans who doesn't live in the US, who invest in the US residential market. Because we saw from our own experiences, foreign nationals investing in the US, that when you go to a US bank and tell them, well, I want to buy a property in the US, where do I sign on a mortgage? He will say, well, I know the properties, but I don't know you. You have no credit scoring, you have nothing here in the US. Thank you, but no thanks. You won't see $1 from us. When you go back to your origin country, whether it's in Toronto or Israel or in Australia, you ask your banker, hey, I want to buy a property in the US, give me a mortgage. He said, well, I know you just fine. I don't know the property. So this gap in the market doesn't help in good clients, people that have enough money in their origin country, want to diversify to the US. And just because of this information gap, they simply cannot get good financing from any bank, not in the origin country or in the US. And to solve this, we built Lendai, and we built basically a system that enabled us to underwrite the properties in the US and also underwrite the foreign investors based on information from their origin country. So we look at the property in Georgia, but the investor in Canada, or the property in Florida, but the investor in Sydney, Australia. And once our system is connecting the dots, we can give a very simple and easy answer in a matter of seconds, basically. So the foreign investor can know exactly how much you can borrow and start the process, which is also, of course, a full online and streamlined process, because that's what our technology is enabling us to do.
Yeah, thank you for sharing that. I mean, that's been a huge disconnect, as you just mentioned. I mean, most of our foreign national investors, it's been a challenge. There are ways to set up entity structures, and we'll go through that. You know, we do have cash investors that purchase all cash, but that's not the goal. The goal is to, as we mentioned earlier, use the benefits of leverage to really expand your portfolio. And there has been a disconnect with the lending space for foreign nationals, where there's not a lot of good options. And so this is excellent that we're talking about the different options available to clients. I think we'll have a lot of people that will find this very valuable and help them to reach their investment goals beyond what they would do just buying properties all cash. Let's dive a little bit deeper into how the process works. Let's maybe use a case study or a scenario where we have a foreign national who has, let's say they haven't invested in the States yet, and they're looking to invest with rent-to-retirement with one of our properties, regardless of the location. They have good credit and financials. What is the step to follow? Do they need to set up an LLC structure? Do you assist with that? What kind of terms are we looking at? Can we kind of just run through the process, start to finish, of what that looks like when we have someone that would be a good fit for your model?
Of course. So first of all, just to answer your question, yes, we do require an LLC to be established in the US, because the loan is actually being made to a US-based LLC. Even though the borrower can sit overseas, the actual loan will be the borrower. Actually, in the legal documents will be the LLC in the US. The process is very simple. If let's say he wants to buy a new purchase property, first of all, he want to know how much can he borrow, because you want to know how much buying power he has. So it starts with a pre-approval process. So we approach one of you guys, or you have a landing page that is dedicated to you in our system. He put in his information, he gets an email, and then he has 5 to 10 minutes to spend answering questions about himself, about his financials in his origin country, about his experience in the US as far as investments, and he will get an immediate pre-qualification letter. So we will tell him, hey, you're pre-qualified. Do you want to get this letter? Basically, you can download it, and then he can give it to you, so you can know that he is pre-qualified. If you want to be pre-approved and really having us check his financials thoroughly, not just online, so he moved to the next step, schedule a meeting, a Zoom meeting. Of course, everything is online with our representative. And then on this meeting, we help him to upload all kinds of documents, his bank statements, his credit report, all kinds of his ID, of course. We want to verify who he is. Everything that he needs to upload is from his origin country, in his origin language. He doesn't need to translate anything to English if it's not in English. He doesn't need to get anything in the US. It's his own bank account. It's his own credit report from Canada or from Australia or from Israel. It doesn't really matter. We use this information, and within 12 to 24 hours, we'll give him a final pre-approval. So now it's not just his answering the question. We saw the data, so our system can evaluate it and get a specific pre-approval with a specific number. How much can he borrow? What will be the interest rate? The interest rate as of today, October 2021, it starts at 424. It can go up to 525, but that's the range. And we work with good borrowers and good properties and good partners like yourself. So we're not hard money lenders. We're not taking 10% interest rate. We will give the best offer we can to our borrowers because we're here for the long run. Our borrowers are coming to us over and over again for more loans, so we want to give them the best offer we can.
Just to be clear, we're talking about acquiring a property as a long-term hold, right? These are long-term loans where they're going to acquire the asset, and they're using, this is, like you mentioned, not hard money. This isn't something for, and you may have different loan programs, which you can talk about as well. But really what we're talking about right now is a buy and hold property that you're going to add to your portfolio that will cash flow. Can we also talk a little bit about the other terms as far as like what type of LTV, loan to value we're looking at, what kind of down payment is required? In addition to that, what kind of prerequisites do you have for the client? Do they need to have some sort of liquidity amount or investment experience? Can a brand new investor, qualify for these loans? Any sort of criteria that you require of the borrower?
Yeah. So first of all, as far as LTV, as of today, we give up to 60% LTV or LTC, loan to cost, if it's a new purchase. It could be his first investment property in the US. It doesn't have to be a seasoned investor in the US. We don't demand this because we know how to look on him in his origin country. And that's basically the big things. Our loans can be up to $500,000 per borrower or per loan, of course. We do loans that are for single property. We do loans, a lot of them actually, portfolio loans. If somebody want to buy 2 properties, 4 properties, or more than that, so we finance the entire portfolio with one loan. And actually, one thing that I really like in our product is on the cash out refi side, we have a system that I call it buy one, get one free, except of closing costs. Basically, what it means that if you're a foreign national who bought a property, let's say $300,000 in Atlanta 2 years ago, now you come to us with a few click of a button and 2 weeks, you get 60% out of this property. So you get around $180,000. And now with those money, you go to rent to retirement, they find you another property, let's say in another $300,000. You get another 60% from us. So you're not just having another property, you even have excess capital to go and maybe renovate a bit both of the property. So we basically bought one property, and with the equity that's been accumulated in this property, you can actually buy another one without paying any extra dollar from your pocket. On the contrary, you will even have some extra cash after the process. So it's basically buy one, get one free. And now you diversified your portfolio. So if there's no tenant in one of them, the other is still paying the rent. And of course, you have more income because you have 2 tenants and 2 properties and making a monthly payments.
That's huge. Just to reiterate what you said, we all know that anytime you go through another loan or refinance, there's additional costs associated with that. So building a relationship with Lendai, you're making it available to have a continued relationship at minimal cost involved. because closing costs and loan points, I mean, those all add up as we all know. But more importantly, what you mentioned is a huge benefit to, I think, anyone that is trying to build a scalable portfolio over time, is a simple fact that instead of being a foreign national and coming in and just having to purchase all cash, you're getting better than 50% financing, which is historically, it's hard to achieve, but when we have seen it, that's kind of the rule of thumb is 50%. So you're doing significantly better than that. And that allows clients to have more working capital. You have $100,000 house, instead of buying $100,000 house, you can buy two houses and have additional capital to expand your portfolio. Of course, we definitely recommend building a diversified portfolio with multiple streams of income. Just like to your point, Yair, if there's a tenant that moves out and the house is vacant, then you lose 100% of your income. Whereas if you had 3 or 4 properties and you have a vacancy, no big deal. You're still positive cash flow overall. Plus, you get all the benefits additionally with each individual property appreciating, the tenant paying the loan down. And I think you made an extremely valuable point about investors that maybe already own properties, the ability to access the capital in those to do a refi and reinvest to scale their portfolio. Do you want to talk any further about the refinance product?
Actually, today, more than 85% of our loan are exactly those. The people that bought cash properties in the last decade, since the 2008 crisis, more or less. And there's a lot of equity in those world, because I don't know how much all of our listeners following the US market, but the property prices have gone to the highest amount level ever. So if you look on 30 or even 50 years back, the property average price was never so high. So there's a lot of equity. If you bought a property in, let's say, $200,000 5 years ago in South Florida, now it's worth between $300,000 to $400,000. But all this equity is stuck between the walls. As a foreign investor, the only way you can enjoy it is sell the property, but then you're losing your income stream from this property. And once you sell it, you're also paying capital gain tax. So you lose 25% of the appreciation. The other way you could do is just come to Lendai, cash out 60% of the property value. So you get back all your equity and then some in many cases. And all the costs around this transaction are tax deductible. So it's not just you're not paying tax, you even get tax deductions on your income for the next year or so. And actually all the loan costs, the interest rate, the appraisal, the title, everything related to the loan is fully tax deductible. So the actual price, it's not even 4.25, let's say, it could be less than that if you can deduct those costs on your income in the US. So that's a big deal. And we see a lot of investors just doing the BRRR model, buying, renovating, or having someone like rent to retirement helping them to renovate it and then put in the tenant, extract the capital and move to the next one. And you can just grow your portfolio basically endlessly if you're doing it in the right way.
All about scalability over time. And then that's a perfect fit for some of the new construction that we do in Southwest Florida, where someone could come into a property that they just bought and closed on that might, and actually a lot of our foreign nationals are very attracted to these and are investing heavily in them. But we have new construction that could have $50,000 or $60,000 of equity day one, just because of the market. We're selling below market value. The property is appreciating quickly. And so it makes sense to, do a cash out refi and pull equity out to then further reinvest and scale your portfolio. I mean, one of my major mentors in real estate investing always told me that, there is such a thing as return on equity. It's it's another tool in the toolbox. And if you're not using it, your return is zero. So it's just a way. I mean, capital is the most limiting factor for everyone. And often with foreign nationals, that's even more so the case, because we need to solve the lending solution, which is exactly what we're talking about today. So it gives you the ability to scale over time and grow your portfolio, which is the goal for everyone. Just back to the LLC topic real quick. Yeah, or did you say that your team assists with setting up the LLC? I mean, we have our team and our legal and tax guys, but is that something you help them facilitate, or?
We can connect them to service providers. We won't do the actual legal work, but of course we have, and we have actually service providers in every country that we work with. So we have Canadians who live in the US that help the Canadians. We have Israelis who live in the US who help the Israelis, because everybody likes to work with his own people, as they say. He speaks Hebrew and I'm speaking Hebrew. Okay, let's work with the Israeli. He speaks Hindu and I'm an Indian. Let's work with him. It's easier for the foreign nationals, so they can really get a full service in their origin country or in their origin language if they're not speaking English, which some of them don't, as we all know, of course. So, and on the last topic, just one thing that I'm always saying to people, that for me, the biggest the difference between investing in the stock market and investing in real estate is the ability of using other people's money. Because in the stock market, if you have $100, you can buy stocks in $100, but that's it. In the real estate, you have $100, you can buy property in $400, and that's the whole difference.
Absolutely. I love that. I mean, we could go on and on talking about that. I love to use that example with people. I mean, personally, I don't do any investing outside of real estate because we know this, right? We eat, sleep, and breathe real estate, and it's been successful for us. And stick to what you know. I think Warren Buffett said, invest in what you know and nothing more. And that this is our world. So I mean, obviously, we're very bullish on real estate, but when you compare it to stocks and using other people's money, I mean, for example, let's say that you bought $100,000 property versus putting, and even just, use leverage for that versus putting $100,000 into stocks, where if you had a 5% increase or return for 1 year, now you have $105,000 in stocks. Whereas if you use leverage, even if, let's call it 50%, and that house price, that $100,000 house price went up 5%. And now that house is worth $105,000, but you have a much higher return because you're using leverage. You're not into it for $100,000. So you would have a 10% or even greater, depending on better financing terms. So that is the power of leverage. One last thing I'd like to cover with you, Yair, just from an international perspective, what is driving people to invest in rental real estate in the U.S.? I mean, what's kind of the benefit? Why are people interested in investing in real estate in the United States versus their own personal country? What are the market conditions? We talked about houses being at a high price point right now. I mean, some people could be concerned to say, well, is there going to be a correction? I mean, is that something to be concerned about? I mean, obviously, we're evaluating everything from a cash flow analysis and investing in markets that are, highly diversified in their economy and things like this. So they'll be rather stable, in the event that prices change, they're still cash flowing well and you're still obtaining a regular return on those. But from an international perspective, why are people investing in real estate in the U.S.? What's the draw? And what are you looking at the market right now and seeing?
Yeah, so I'll start with why, and we see in the markets that I think it's a rule of thumb that markets that in the origin country, $100,000 doesn't buy you anything in the real estate market. Those are the markets that like the US the most. So if you're looking on Canada or let's say Toronto, London, Tel Aviv, Sydney, if you take $100,000, you can buy, I don't know, a 10-meter warehouse in the worst parts of the city. If you take the same $100,000 to the US, you can go, if you go to Ohio, for example, you can buy a 4-bedroom apartment, or you can go even to Florida, go to Jacksonville. You can buy a house with a pool in those $100,000. If you add on this $100,000 financing, that's a whole different story of what you can do with this money. So first of all, even though the US market went up in 30-40% in the last year and a half, it's still much more achievable than any other market in the world, or almost any other market in Western countries. The other thing is, the ease of doing business in the US is much, much better than almost any other place around the world. Everything is organized. I know I had some, just for the sake of the example, some investments in Greece. We bought a building there and we invest there. Everything that you're doing in Greece is like a black economy. You have no records on how much money was spent on anything. You don't know how much you will pay at the end. You don't know how long will be the transaction. You have nothing like a title company that ensure you that you are the right owner of the property. Everything is a mess. And that's just one economy. I can give you 10 other examples. In the US, everything is so organized, and you have the title insurance, and you have the appraisal reports that is spot on, and you have companies like yours that knows how to analyze the property, because there's so much data. If you go to any other place in the world, and this is part of the reason why Lendai is working in the US and let's say not in Germany, because there's so much data. And if you know how to tap into this data, and if you know how to analyze it, you can really make smart decisions. Or if you try to do the same in France or Germany or Israel, you have no access to this data. So you're basically just relying on a hunch. And people like to have the data, have the numbers, so they can invest smarter. So that's two main reasons that I see why people are doing business in the US. It's the prices, of course, the returns are much higher, and the data and the ease of doing business. So that's on your first question.
Just on your point, I mean the tax benefits and investing in real estate, like we really started to gather a strong sense, because my wife's Canadian. I don't know if you knew that, and We own properties in Canada. We don't actively buy there, but she had some. But once you really look at the tax code and how the United States is really tailored towards real estate investors, there's no other country that comes close. A 1031, something like this, or a cost segregation study. I mean, there's no other country that I'm aware of that has that kind of tax benefits and being rental income being taxed at a lower percentage. I mean, a lot of countries make it very challenging for investors. You have to have an immense amount of capital, as you mentioned, to break the entry point into owning real estate, and then it's challenging to have a profitable property. So, I mean, I think that's what drives a lot of our international and foreign nationals to clients to come in and invest in rental real estate, as well as achieving better terms, like you just mentioned. I never knew what negative gearing was until we talked to some Australian investors. And basically, the idea is you're buying negatively cash flowing properties at astronomical prices to have losses, and so there is some tax play with that. But I mean, the reality is that's quite a gamble, to have a significantly negative cash flowing property just for the you're riding on appreciation, you're banking on appreciation. Appreciation changes, that's a whole different scenario. But yes, I'll go ahead and let you kind of dive into the last question here of just what is the market, the U.S. economy and the market looking at from a real estate perspective right now, and why is now a good time to still invest? I mean, why should people be considering investing sooner rather than later and taking action right now in the United States?
Yeah, so first of all, I will start with, I think it's the same Warren Buffett that you mentioned that said, don't wait to buy real estate and wait. That's the whole guidelines on one leg. But eventually, if we're looking on the market as of this moment, and we're seeing, I'm living here in Florida, the prices went up like they've never been before. But if you're looking on 2007 crisis and you're looking on 2020, 2021 situation, it's a whole different situation. The market didn't went up higher just because people are giving mortgages to anyone and with 100% LTV, people with no income. First of all, even to Americans in the US, they have a lot of verification of income proof, and the market is went high because people have more money, because the government poured a lot of money into this on the citizens. They were stuck at home, so they didn't want to movies, they didn't want to vacation, so they have more cash free, and the interest rate dropped, so lending money was cheaper. It's not easier, but it was cheaper. So they still have you to go on the entire process and putting a 20% down payment, which of course in 2007 you didn't put any down payment, but the process is harder. It's still hard, but it's so cheaper. So an American in the peak of the crisis could get a mortgage in 2.2%. That's like getting free money. So everyone went into the market. Here in South Florida, specifically, the market is not just driven by those easy and accessible and cheap cash or mortgages. It's more because people are actually moving in. If I'm looking, we just looked on a rental property that went out for rent. It was on the market, and the rent was $4,500 a month. Not a cheap property, not something that, not in the suburbs. It was on the market for 4 hours, not 4 days even, 4 hours, and it was snapped. Because people are actually moving. There is a internal migration in the US. People are moving from New York, from California, to Texas, to Florida. And those are people with money. They used to have a property that cost $3 million in upstate New York. And now they buy in $1 million, a house with a pool in Florida. So for them, it's cheap. For the Florida guys, said, hey, what happened with the prices? But it's actually in migration and not just a bubble. So that's a very big difference than what it used to be. So that's the first thing. And what was the second question? Just where the market will go. So I'm not a prophet. I can't say where it will go from here. But that's related to something that you said. Even if something will happen, and the market will go slightly down, and there will be a correction, it won't be all over the state. The U.S. is 50 states with 3,200 counties, which means if it's too expensive in South Florida, go to Michigan. If it's too expensive in Georgia, go to Pennsylvania. You have so many other markets, and even in the same place, you can now in South Florida, it's too expensive. Go 4 hours to Orlando, the prices are different. Go 6 hours to Jacksonville, the prices are again different. So the US, as when people and foreign nationals think, the US is expensive now. No, the US is huge. It's a half a continent. and it's 3,200 different counties. And within the counties, you have different markets. So if you have the boots on the ground, people are like Rent to Retirement that can find you the opportunities in the market, you can really still find very good investment properties in the US. And if you were smart enough, as we said, not wait and you bought it a few years ago, so now you have a lot of appreciation, you can use the equity and buy. So you take the equity from your Florida property and you put it in an Ohio property, or two Ohio properties actually, because one property from Florida can buy you 2 or 3 in Ohio. So if you know how to play with the market and you understand that as Churchill said, don't let a good crisis go to waste. Every crisis in the market always lies with opportunities, and you just need to have the right people to find those opportunities for you.
I love it. I mean, first of all, you have good fundamentals, right? And that's exactly what our team does, is analyze different parts of the country to invest in. And we personally invest in these areas that meet our fundamental criteria. These are states that have landlord-friendly legislation, low taxes, population and economic growth, strong rental demand, diversity of economy. So you really need to be looking at the U.S., as you mentioned, on a microeconomic scale. You cannot look at it across the whole, because coastal markets where you have astronomical prices, that's a different market than the Midwest, the Southeast. I mean, Florida has its own economy, right? It's the 11th largest economy in the world, just Florida as a whole. I mean, there's 1,000 people a day moving there, and it's got a GDP of over $1 trillion. I mean, so you look at each market on an individual basis, and then you also invest in the fundamentals, right? You invest in areas that have good cash flow. That way, if there was a market correction for whatever reason, you still have strong rental demand, and that property is still performing. All real estate goes up over time. But yeah, I appreciate your time. This has been excellent. I mean, I appreciate you taking such good care of our clients and being such a valuable resource to our investors, our foreign nationals that are looking to tap into the U.S. real estate market and expand their portfolio aggressively and strategically. So, I mean, you guys have just been an awesome partner. We appreciate everything you're doing. Your customer service is outstanding. You guys are extremely responsive, and your investors yourselves. I think that's an important thing to know. Whenever every lender that we want to work with, and really everyone in this business, we want to make sure they are real estate centric and investors themselves, because they get it. I mean, you can also coach investors on how to be strategic and incorporate all the other aspects that you need to build a successful business model. So that's important to us. But we'll post your information below the link. We have you guys on our website. Of course, if anyone has any questions about the properties of Rent to Retirement, you can go to our website and reach out to one of our investment counselors. And if you just have questions for Yair at Lendai, I mean, we'll put your information below in this video, and we'll also be happy to make an introduction to anyone that wants to have a follow-up discussion. So I appreciate your time.
Yeah, thank you very much for having me. It's always a pleasure talking to you. And we invite all foreign nationals to take advantage of the market and use Rent to Retirement resources and market analysis and just start investing now and not waiting for tomorrow, basically.
Taking action. All right, sounds good. Thanks, Yair.
Thank you. Have a wonderful day.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.